Welcome everybody and kia ora koutou. Thank you for coming tonight. Thank you for inviting me. I live in the Bombay, so I've driven quite a way tonight, so it's really great to be here. And also, thank you to you for your commitment as well, because you could easily have stayed in tonight watching TV, but you've shown real commitment and passion about property investment to be here tonight and to learn, and that says a lot about you, and I say thank you for that, so never take that for granted. I'm a school teacher, a full-time school teacher. My wife Bernadette here, she's a nurse at Middlemore Hospital. So we're full-time salaried workers, and we own 6 properties. We own our own lifestyle block in the Bombay Hills. In the last sort of 15 months, we've bought 4 rental properties through joining Renovations, which is a mentoring group run by Ron Hoi Fong. I've been in the group since about March last year. So one thing about being in the group has really inspired me to take some really positive action. So I'm hoping tonight, one of the sessions that I'm doing tonight is I'm hoping that everyone has written a goal down, and at the end of the session you're going to share your goals with each other in the group, and I'm hoping that you'll go away tonight and take some positive action. And you'll see that on the sheet I've put some business cards there as well. Those are people that belong in my team. And the people in my team, the solicitors, the brokers, the builders, they all are used to working with property investors. In fact, some of them are property investors themselves, so they're very familiar with what property investment is all about. So just before I start, I just want to know how many people here actually own right now a rental investment. Who's got a rental property? Just put your hands up, please. Oh, a lot of you. Cool. Okay, how many of you have got one rental property? Put your hands up. Just one. Cool. All right, 2. Excellent. 3. Wow, some pros here. 4. Okay, you guys are already on the ladder then. 5, more than 5. Excellent. Just keep your hands up. You guys more than 5? Okay, go and give them a book, please. We've got a little gift coming for you. Keep your hands up. My wife will be around with a book. Well, that's really awesome. So I thought this was a beginners group, so clearly not. So that's really awesome. And you at the back, Pat. Okay, cool. Why did I get into property investment? I am a school teacher, and 2 or 3 years ago I actually went to events like this. I started off, I went to the ARPIA events, and I drove up from Bombay, and I learnt through these events. So I was exactly where you are 2 years ago, and these events have been really worthwhile for me along the ladder. So I decided last year to join the Renovations Property Mentoring Group because we'd only bought 1 property in about 2 or 3 years. So we needed to take massive action, and by joining the Renovations Group, we've been doing that. I got the idea of rental investment was through joining a network marketing company called ACN. ACN were featured on the Celebrity Apprentice with Donald Trump about 2 or 3 years ago. They did that video phone thing. I don't know if you all saw it. But I didn't do very well at it, but what it taught me was the power of passive income. So you make your money when you're asleep, basically, with network marketing. And the other thing was the great training that you get. And what I learned was, in relation to success and achievement, there are 4 types of people. There are the top 6% who are your go-getters, your high achievers, your goal setters. They just go out and do it. That's your Richard Bransons and your Donald Trumps. Then you've got a smaller group, 12%, around thinkers. That's people that just take a little bit longer to take action, but they still get things done. They're still goal setters and they get things done. And then you go around 40%, whose lives are people's lives who are just basically going like that. They're bored, they're depressed, and they're frightened to take that first step. And then at the bottom, or the next 40%, is what I call the tall poppy syndrome. It's the people that just thrive on negativity and don't want anyone to do well. So clearly, you guys belong in that top 2 groups tonight. You're either thinkers or you're high achievers, else you wouldn't be here. So that just says a lot about you as well. Okay. Yeah, I joined last year. And what we did, to start off with, this is my home. That's my mum. We purchased this lifestyle block in 2006. We had a home, a small terraced home in the UK, a 2 up, 2 down terraced house, and we managed to swap it for this. So this is one of the benefits of living in New Zealand. Revalued it last year and found out that it came to 670, so it gave me equity of £105,000. So what we did was we used that equity to get ourselves along the property ladder. So by revaluing the property out at that figure there, 670,000, we discovered that the loan to value ratio was at 66%. That's basically your mortgage divided by the value of your property. And you need to know that. That's a really important figure because the banks certainly want to know that. And what I try and do is to try and keep that figure at 80% or below, because once I go over 80%, then I become high risk to the banks. It's very hard to get lending. Before you start, it's really important that you set up the right tax structure. You don't want to be doing it halfway in. So before you even begin that, make sure you go to a tax specialist and you set up the right tax structure. Don't skimp on a cheap solicitor because it can actually cost you a lot of money in the long run. We put our home in a family trust, so it was protected. We had asset protection. And then by crunching the numbers, we purchased a property in Birkdale. Now, I didn't know anything about Birkdale. I live in Bombay, so it's at the other end of Auckland for me. Is anyone here from Birkdale or familiar with the area at all? No? One or two people from the North Shore, cool. And we managed, because we had such a low LVR at 66%, we were able to get 100% finance to buy our first property, which is great because it gave us lots of leverage. It was in Birkdale. I went up there, I used a property finder. Didn't know anything about the area, but I drove around for about half an hour or so and I discovered a few things. It was 10 minutes from the bridge, which is great for working people. It was in a quiet, closed, private cul-de-sac. It was great. It was on that Birkdale Road, which had lots of shops and things close by. So I had lots of things to attract tenants to. And it was also north-facing and a big deck on the back. And that really, I thought, well, people will come and rent it out quite easy. So this is it. And this are the numbers. I purchased it for 305,000. Just had it valued this April, and you'll see it's really good equity. In terms of numbers, this is actually my best property. The CV on the property is actually 395, so it's well below CV. And buying it in 2009, I actually bought it right at the bottom of the slump. So that was a really great time to buy. But the problem at that time was in 2009, it was really hard to get finance from the banks. They were really stingy. But because I had a really good an LVR on my home property and good equity in it, I was able to use that equity as a security to buy that property. So if you haven't bought a property, you need to examine what your LVR is and how much equity that you've got in it. How many people here own their own home? Just put your hands up, please. Your own home. Okay. Now, I was looking at the Crocker's information the other night on the New Lynn properties, and I see they've gone up house prices have gone up 25% in the last 12 months. So my guess is that some of you are sitting on some really good equity. So if you haven't bought a property yet now, what I suggest you do is you get pre-finance approval and look at exploring ways of what you can do with that equity. So you guys are sitting pretty. That's really cool. Yep, so it's a 3-bedroom house. What I've decided to do tonight is I'm going to go through each property because there were various lessons and mistakes learned along the way, even including the last one. So lessons learned on this one here. It's currently rent for $460 a week, which is really great rent. I met a property finder as soon as I actually purchased the property, and he was telling me, why have you bought on the North Shore? You should be buying in Manurewa in South Auckland because you get really good cash flow. And I thought, I've made a mistake. But actually, no, I've actually managed to get really good cash flow on this property as well with really good equity. So 7.8 is my actual highest gross yield at the moment. With the CV at 395, and I bought the property for 305, so I made that 90,000 equity gain straight away. It taught me the lesson that CVs aren't always accurate. I think about 2 in every 10 CVs, or the government valuations or capital valuations, are inaccurate. And this one clearly wasn't, so don't always go by the CVs. I didn't do a building inspection on the property. I did a limb report, but what I discovered was that there was a problem with the joist underneath the property, and there was a big problem with the deck as well, and last year the deck fell down, which was a real problem because it took me a lot of money to fix it. I hadn't realized that by going underneath the house, the joists were quite rotten and quite loose as well. So I spent a lot of money and a lot of time dealing with the council because I had to get consent from the council to put this deck in. And there was lots of obstacles along the way to actually put the deck in, and it was a real pain. So I put it in. This is it there now. But it's added a bit of value to the property as well. So always do a builder's inspection. That's really important because, you know, in the long run, it can be very, very expensive. Due diligence, I drove around, I crunched the numbers. I worked with a mortgage broker called Chris Peterson, and he crunched the numbers for me, and it all stacked up, so I thought this looks a good buy. And I discovered with the title that it was a stratum title, which basically means it needs to have a body core, and I wasn't aware of the time, so I had to get with the next door neighbour to actually work out a body core and who's going to pay for what. So just be aware of the title on the property as well. So basically what I do is I bought Ranier Street, and that was in 2009. Then for two to 3 years, I couldn't actually get any finance whatsoever. It was really, really difficult. So my wife and I, we decided at the beginning of last year to take some really massive action. We joined Renovations, which is the mentoring group run by Ron Hoi Fong. Ron Hoi Fong is a multi-millionaire investor, and Bernie and I, we decided to join the group. Now, Bernie hadn't met him, so she was very skeptical about giving some money away to join a property group, but I convinced her to go along, and we went along to the group, and we realized the power and the benefits of networking with other like-minded investors. It really was a positive experience for both of us, and she could see the advantages of joining the group. So if you're in any doubts, come and speak to Bernie, because she'll tell you what it's achieved for us. So what we do basically is that we buy a property. Well, we buy it at wholesale price rather than retail price, so we get discounts straight away. You make your money when you buy property, not when you sell it. So what we do with the equity then is that we go to the mortgage broker and we say, can we have a deposit or a top-up for the next property? And that's how you make your money. So you buy your property, you add a little bit of value to it, you top up your deposit through the equity that you've already made, and then you go and buy your next property. And that's what we've been doing over the last 16 months, 15 months. So this is a two-bedroom unit in Ellerslie, which we bought at the beginning of last year. We decided that this was a really good buy. It had gone to auction, it hadn't sold, and 3 days later we made a phone call. I went around to do the open home, it still hadn't sold. 3 days after an auction is a really good time to approach a vendor because they become really, really motivated, especially if no one's rung them up. And this vendor was really motivated. In fact, it was a divorced couple, so these were really motivated to sell. And what we decided to do was we make it into a 3-bedroom property. So we add a little bit of value. We put in a 3rd bedroom to this property here. So you can see from the equity gain that we've made some really good equity on it already. So by putting in the extra bedroom, we spent 17K on the renovations. It's currently rented at $400 a week. The yield's quite good as well. It's in a really great area. It's very close to the Ellerslie roundabout there, so it's in a really great area. So every time I step into a property, one of the things that I'm looking at is how can I add value to this property, and that's the way you want to think as well, because if you add value, then you increase the value of the property so you can get that deposit out for the next property. What we're trying to do is get our deposit out within 3 months of buying the property, basically. This was quite a funny one because we were looking at other properties at the same time, and what I found out is quite advantageous to have two deals going on at the same time. So we actually bought this property when we were negotiating with another real estate agent on another property in Mount Albert, and this property, the agent from this property actually called us up and said, look, we were negotiating on the phone whilst we were doing a transaction with the other agent as well. So they suddenly became both very motivated to sell to me. So I enjoy negotiation, and this was certainly a lot of fun, playing 2 agents off against each other. So where you can do that, that's really cool, because it just gets them even more motivated to sell to you. Motivated vendors, this was a divorced couple, and they really wanted to sell. They hadn't sold at auction, they didn't get the price, so they were really motivated to sell. And I think that's one thing in common with all the 5 properties I bought, is that the vendors were really motivated. The Birkdale property, for example, the vendor had already moved down to the south to Invercargill and said, just get rid of it. So she was selling at 305, which is just way below value. It was on the market for 400. So look for motivated vendors, because they're the ones that will offer you the best deals. The yield. So this is a numbers game. It's a business. It's not a hobby. And you've got to treat it like a business. So it's all about doing the numbers, crunching the numbers. So every time I buy a property, I'm asking myself, what is the actual rent of the property? What yield am I going to get? What's going to be the gross return from the property itself? So there's the little formula there. So you put in your rent, your purchase price, and you just times it by 100, and that will work out your gross yield. This particular property here, we only had to get 10%, so that 10% that came from the first property and our home property, the equity that we had in there. And at that time, our LVR had gone up to about 79%. So we're still quite low risk at that time in terms of eyes with the bank. Next, this came quickly afterwards, 2 months later. We found this property on the Ellerslie Highway in Mount Wellington, very close to Lunn Avenue, which has really taken off, hasn't it? This was a private sale. It was by tender. This was a really cool one because the actual vendor themselves was very young, quite naive, but selling it for their parents. I found out was telling me the price, what the top price in the tender was. So I straight away knew what to put in, and I managed to get the property for $264. I told her to hang on. I said, "Why are you selling it now?" But she was having none of it. So if she was selling it today, she would get around $337,000 for it. So again, good equity, but motivated vendor again wanting to sell. This was a 2-bedroom unit. The one thing I like about this property is the aspect of the property. It's in a great location, Ellerslie Highway. But what I like is if you notice the satellite dishes, they're all, do you know which way they're all facing? They're all facing north, aren't they? So that'll tell you where the sun's coming in from. So this one's got a really great aspect. So during the daytime, this property's getting a lot of sun. It's got a nice little deck here, though you can't see it. So that's a nice thing that tenants want. Nice aspect, north facing. Same with the deck at Birkdale. We decided to leave this one as a 2-bedroom property. We couldn't really fit it in. But we did it up inside. We painted it. We put in new carpets, curtains, little things. And we spent about $5-6K on renovations on this property. So it worked out as a really good deal. And the numbers on it at the moment, it's currently renting about $370 per week. I believe that's the market rent for about the Mount Wellington area at the moment. And charge market rent, if you lower your rent too much, you're going to attract cheap tenants. Cheap rent, cheap tenants. So, you know, charge market rent if you want a better quality of tenant. You'll find there's less problems as well. So charge market rent. So what I do is every day I get the emails coming up from the rentals on Trade Me. So I can see what the latest prices are on Trade Me for people wanting to buy or rent properties. So this one's currently going for $370, 7.2% gross yield. One of the lessons I learned from this property was it took us about 7 or 8 weeks from purchase, settlement date, to actually get the property renovated, done up, and then on the market. And that was far too long. The reason for that was we had a builder that was just a complete and utter time waste, and we ended up having to go with someone else. So try, and if you can, try and find people or work for you that you can rely upon. And on the sheet on the back there, I've put the name of a builder that you could go to who's been working for me. With the private sale, I was trying to think win-win. When we were negotiating, I was trying to think win-win. So I was looking at ways of, well, if you give me the price, you get the sale. So when you're negotiating, try to think win-win. Try and think we both win. And that way you're more likely to achieve a more positive outcome. With the body core, this is in a block of 8 units. We discovered on this one here that we were paying something like $300 a month for something called an owner's agency fee. I don't know what it was, but one of the tenants was running the body core. And I thought that was really quite high. So when I investigated, there was no annual general minutes. There was no record of any maintenance done on the property. So it all looked a bit shanty. So what I did was I got all the email addresses of all the other the owners, the landlords in the block. And I had a meeting at Green Lanes in McDonald. And I said, look, this is not on. And I got the body core administration to come in and run the property for far less. So just be aware of some of the body cores. Just read the minutes, look at the budget, look at the finance, and see what's going on there. So after reno, this was back last year. The reno came out at 310. So I just made 46K instant property. Okay, better than shares? Better than trading? So next one. This was a capital growth buy, Mount Eden. one of my strategies is to buy in the central Auckland suburbs. So I'm looking at anything from Sylvia Park to Waterview, anything in between there, because that particular area there is fantastic. You get tenants, you've got good infrastructure, you've got roads, people want to live there, you're close to things like the Onehunga Mall, Sylvia Park. It's just amazing the amount of workers and people that want to go to Sylvia Park. So you're close to all these things that people want. So I only buy those properties in those areas there. And the other thing is that when you go into a slump, these properties will keep their value as well. So to look to buy in those areas there. So I purchased this at the beginning of the year, 330, it's my most expensive buy, but I discovered a month later at auction the property in the upstairs unit here, that sold for 490. So that just told me I bought a really good buy. The property itself was completely newly renovated as well. I didn't have to do anything to it. So I got it on the market straight away, and it's renting at 410 a week. And in April, another unit here sold for 450. So I've obviously made some good equity on it, even though it's not suggesting that at the moment on there. I had a very conservative valuer do this valuation, so I know it's worth a lot more than 342. So that's in Mount Eden. That's opposite the summit. So it's a really good area. People want to live there. Easy to find tenants. Yield on this one, 6.5%. I think in the current market, with no renovation needed, I mean, that's fine as well, because right now we're in the first year of a boom. Certainly in that area we're just talking about there, the central Auckland suburbs, we're in a boom. So you don't really need to find a property to renovate or add value too much, because the property prices are going up all the time. And in a boom, they'll be going up 20 to 30% a year. So you're coming in at the right time to buy property right now, because the natural property cycle, the boom, is actually taking the value of your properties up. So you don't need to buy properties to renovate, not all the time. This went to auction. It went to a pre-auction. So I put an offer in. It got called into pre-auction. Vendor motivated to sell again because it had been on the market for a long time. It's always a good sign. The property's been on the market for 7 or 8 weeks. That's generally a sign that the vendor is very motivated. So I went to the pre-auction, and this was in Meadowbank in the Barfoot and Thompsons, and absolutely no one turned up. Just me, my agent, and that was it. So that was a real good steal, 330. With the property cycle, where since Labor Day last year, we are in a boom situation. So at the moment, the properties are going up, and they probably will do for the next 2 to 3 years. So good time to buy right now. That was a 2-bedroom, yeah, very small 2-bedroom. I think it was only about 65 square meters, that one. Very small. And this is what I'm working on at the moment. I've got an abundance mentality, because there's people in the group that were saying to me, oh, I can't find any properties at the moment, the market's too hot, it's going crazy, there's nothing out there for me. But you will find them. The last property? This one here, I'm a school teacher, so I was off in the summer holidays, get 7 weeks off, great, I spent every day of my holidays looking for properties. I get up in the morning, I'd be on TradeMe, on realestate.co.nz, looking at properties. Then I just drive out, I do my figures, crunch some numbers, drive out and just go and visit all these properties. And after 6.5 weeks, I hadn't found anything. And lo and behold, I kept trying, and I managed to find this property here. So I got this right in the 7th final week of the holiday. So if you can't find something, don't give up, because there's always something out there for you. You just got to keep looking and keep believing. I have an abundance mentality rather than a limited belief in that you'll always find something out there. And there always is. Yeah, this is what I'm working on at the moment. It's in Onehunga. This is, anyone know Tower Road? No? Yeah. You know everything. And Miss Auckland over there. This is, this property here is very close to Cornwall Park. So it's in a really great area. And it's also 5 minutes from the Onehunga Mall Drive as well, the mall itself, which is another big sort of attraction for tenants as well. So this is in a really great area. Currently renovating at the moment. There's quite a lot that needs doing to it. I haven't had it revalued just yet, but I mean, conservatively, 2-bedroom units in Onehunga at the moment in that area going for around 380, 400. There was a 2-bedroom standalone brick and tile just sold for over 600,000 last week. So it's a really great area. This one's got a deck. Real feature. This one here there was a lot wrong with this one, and I did do a builder's report. And the builder's report came to 29 pages. So when I went to the agent, and this has probably been on the market for a long time, no one could get finance on the property because of the state of the property. And the builder's report went to 29 pages. There was a whole lot of things wrong with it. The joists, the piling underneath the property were rotten, and the actual boards on the property itself had actually fallen in. So there was a lot of wrong with the property. So when I went to see the property, I made sure that the agent knows that there was actually quite a lot wrong with it and needs a lot of work to fix it. So I'm conditioning the agent. You all realize that when you go to do an open home or go to an open home, that the agent is already negotiating with you. So with this one here, I was quite keen to point out what was actually quite wrong with the property, and there's a lot needed doing to it. So we had a builder's report done, and I got a quotation from a builder, had it blown up slightly. And what I did was, when we started negotiating on the property, I actually presented the builder's report as well, so they could see what was wrong with the property. It was on market for $349. When I presented the builder's report, she came down to $320. I started with an unconditional cash offer of $300,000. Now, cash offers are really great because they actually motivate people to sell to you, because it means there's no conditions attached. They'll just buy it as is. So straight away I went with 300. She came down to 320. So straight away I brought her down 29,000, and we worked our way down to 314,000. So learn to negotiate. I particularly like negotiating. I think it's really great fun. Anyone here belong to a DVD rental store? Anyone hire DVDs out at all? A few people? What I do is when I practice negotiating with the rental store, because they love to offer you an extra DVD, don't they? Take one out and you only have to pay $3 for it. You want two for $8. So what I do is I go to them, because they're already making the first mistake, aren't they? They're offering me the price straight away. Never be the first one to make the offer or the price. So they're offering me a price already. So I said, look, I'll take it for $7, or I'll take it for $6. And we're in negotiation. So just learn to practice on little things like that, and you'll get into the habit. If they won't change the price, then I said, okay, I live in Bombay, 20 minutes outside town. This is in Pukekohe. If you won't sell it to me for $8, how about I have it out for an extra night, which hurts them a little bit. And normally they'll agree on something, usually the price. So just negotiate on little things. It's a lot of fun. I love negotiating. And that's a really important skill. Why do it? Well, I mean, that's how you make your money, isn't it, when you buy? If you think about it, if you're saving all this amount of money, let's say you're saving $10,000 every time you negotiate, and you want to build up a property portfolio of, say, 10 properties, what's that? That's $100,000 you're saving. Isn't that a tidy sum of money? So learn to negotiate. Just practice at your local DVD store or something like that. Just negotiate. So if you can't negotiate on the price, negotiate on the conditions. Because that's what you're going to do when you talk with the agent with the sales and purchase agreement, isn't it? You're either talking about the price or you're negotiating the conditions. And this one here, conditioning the vendor. So the builder's report slabbed in front of it. This is what's wrong with it. Straight away we could see would bring the price down. And yeah, so on this one I did a builder's report, so I had to really find out about what was wrong with this property. And knowing your returns. So work out your yields, what your returns are going to be before you actually buy the property, so it all works out. This is a numbers game. So you need to know your LVR, you need to know your yields and what the rent you're going to get. That's really important. You know those three things before you even buy a property. Yeah.
Did you borrow to buy this? Did you borrow money from the bank?
Yes, yeah. What we did was we used the Mount Eden property that we bought in January, plus all the other properties in the portfolio. My LVR at this time was around 80%. So I was still quite the banks were still quite happy. We are still quite low risk. Generally, when you go above 80%, the banks get a little bit fidgety. So I'm always aware what my loan-to-value ratio is, which is a percentage figure. And at the time, it was around 80%, so I was okay. So what I did was I used the equity from the previous properties I had, which had built up, because we were then in a property boom, you see. So when I bought the property, we settled about 3 weeks ago. We were in a boom when I bought this property. So really great buy this. I think it really will go up in value once we put the third bedroom in. So we managed to we actually got 100% finance on this one here from the ASB. ASB are normally quite conservative, but they actually gave us the money on this one here. I've got a really wonderful broker that I work with. His name's in your sheet there, Peter Norris. He was able to get me over the line there, and he's managed to get me over the line on several deals here. Because a lot of banks were not actually giving money on this property here because of the fact of the state of the property. but my broker was able to do it. So
Surprised they give you the money, thinking that
yeah, it'd gone through about 8 or 9 different people and failed. So you know, the people I've put on the sheet there are people that I work with and, you know, I can trust it, and they do a great job for me. No. I've got some with ANZ and some with ASB. The last 2 have been with ASB. ASB somehow have become quite flexible and open at the moment to giving up money at the moment, so I'm using ASB at the moment. But the great thing about my broker is he can oversee my portfolio. And my wife and I, we have this goal of building up a portfolio of 30 properties. He can actually see an overview, and he can actually guide me which banks I need to go with next and who's giving out the best deals. So the idea is that I'm going to spread the loans around with different banks. I don't want to just stay with the same bank all the time. Each bank will lend you up to about $1 million each, so you'll have to spread the risk around. There's also something called the one bank trap as well, so that once you buy 3 or 4 properties and you stick it with the same bank, they can actually pin you in. So just be very careful of that. So try and spread the lending around if you can with different banks. Gary, you're going to talk about the property cycle, aren't you, when you come to that call? So just in summary, some of the things that I've learned along the way that I can share with you. I think this one here, get a great property education. Did anyone see that wellbeing survey that was run by Auckland University of Technology? It was in the paper last year. They're asking questions, things like who's the happiest people in Auckland and all sorts of things like that, or across New Zealand. Well, there was one really interesting statistic in there. It was to do with education. Who's getting educated? And they ranked it by salary. And they discovered that the least educated were the people who were earning less than $20,000. And the most education, that's the people who are getting the most education, that's people like yourselves, they were earning over $100,000. Now, do you think those 2 things are connected? I mean, I'm an educator, I'm in education, so that's something that's really passionate about. But it just shows you, doesn't it, the importance of getting a really great education. I mean, I spent, from 2006 to 2009, I spent 3 years reading every single book, going to every single seminar like this one, just talking to people and asking questions, listening to watching DVDs and listening to CDs on property. I got a really great education. I was really driven and inspired to do that, because the reason for that is I wanted to make the best decisions possible. I wanted to make the best informed decision I can. I didn't want to make any mistakes. So get a really great education like you guys are doing tonight. You're coming here and you're learning, and you're passing on that knowledge to others as well, hopefully, and taking action with it. So get a great property education. Now, I've got you guys to write down your goals. In a minute, I'm going to get you to share them with other people, because that's a really important thing. But write your goals down. And you've all done that. So you've just put yourself in the top 3% of the population. That's actually how many people actually write their goals down, just 3%. And it's proven now that people who write their goals down are more successful than people who don't. So well done, you guys. You've done it. You've all written a goal down. Other things, getting a mentor. One thing I love to do is I love reading autobiographies of successful people, whether it's in business or sport or whatever. And I love learning what are the qualities about these successful people. And I love to learn and love to pick up on what they actually are. And one thing that I learned was that all the successful people I was reading about, they all had a mentor to help them. So when I said to my wife, I said, look, we need to take this seriously. We need to get a mentor, because we don't always know what we're doing. So get a mentor. I think that's a characteristic of all top and successful people. Fall in love with the deal, not with the property. It's a numbers game. So you can't afford to get emotional about a property. It's the numbers. If the numbers work, great. If they don't, move on. All right? It's not about emotion. So look at the numbers, crunch the numbers. Loan to value ratio, the gross yield, and the market rent. Building a great team. I think that's a really important thing. Now, on the sheet there, on the back there, I've put down, and on the business cards, on the back of your sheet, I've put down the names of the people that are in my team, or some of them anyway. I'm doing that for 2 reasons. The first thing is just to say thank you to them, because they've really done a great job and they've really helped my wife and I over the last 2 or 3 years. But secondly, it's also just to give you a kickstart as well. So I'm hoping that tonight that you will go away and you maybe will take some action and maybe engage some of these people here if you needs be, or if you just need a sort of some help with finding a person that you can rely on. The great thing about my team is that they're all property investors themselves, or they are very familiar with property investment. They know how the game works, basically. So I can rely on them. I'll just give them a phone call, and they'll get on and do it. So, and believe you me, I've been through enough bad brokers and builders and so on, so these are the tried and tested people there. So just to go over my strategy again. So I buy and hold. I never ever sell. I was reading about Ollie Newland the other day. He about 30 years ago, he was buying all these properties in Mount Eden for about $1,000 or something, what it was in the 1970s, 1980s. And they're now worth $1 million. But the problem was he went and sold his properties about 10, 20 years ago. So never ever sell a property. Hold on to it. I mean, most of us here tonight are going to go through, 3, 4, 5, 6 different property cycles. And in each property cycle, a property doubles in value. So as we go into this cycle now, the CVs are going to double in value as we go through the boom. So just bear that in mind. That's how you make your money. Capital growth in the boom. So I invest in those central Auckland suburbs. You're looking for discount. You make your money when you buy, so buy at wholesale rather than retail prices. Look to add value. Try and find something wrong with the property when you go in to negotiate with the real estate agent. Someone in the group was just saying they love it when they see a cockroach in a home straight away, because that's something to negotiate. And look to revalue and use the new equity for the next deposit. And just in closing, thank you for tonight and your participation in that. That's really awesome. So you've just put yourself in the top 3%. And on the back of that sheet, you'll see a group of people who are in my team, as I said. One of them is Ron Hoi Fong. He's my mentor. He offers a free 1-hour consultation. Won't cost you anything. So free 1-hour consultation. The great thing about meeting Ron is that he can tell you so much in that 1 hour. I met him 5 times before I joined the group because I just love talking to him. So he's explaining things like where the market's at and what sort of properties I should be looking at. So I learned just so much just in that 1 hour. And he's a really great guy. He's a Kiwi guy. And he's really passionate about helping people. Doesn't do webinars. He's there with you all the way. So he'll help you negotiate deals and how to renovate properties as well. And that's really beneficial, having someone by your side. So please give him a thought. Just make a phone call. He's away at the moment for the next week or so. So just leave a message there on his phone. That'd be really awesome.